From Carr, Riggs, and Ingram, this is It Figures, the CRI podcast, an accounting, advisory, and industry-focused podcast for business and organization leaders, entrepreneurs, and anyone who is looking to go beyond the status quo.
Hello, and welcome to another episode of It Figures. In this podcast, we're going to cover the Employee Retention Credit. Hi, my name is Chris Hoffman. I am the Tax Service Line Leader and a partner at CRI in the Nashville, Tennessee office. Today, I have with me Anne-Marie Sale, who's a partner in our Panama City office. Anne-Marie, can you introduce yourself to the audience?
Yeah, hi, Chris. I'm Anne-Marie Sale. I have been with the firm for probably 18 years, in public accounting for about 20, and I am all things tax. So just enjoy helping clients with their tax matters.
Thanks, Anne-Marie. Also on today's podcast is Randy Matthews, who's joining us from PayWorks. Randy, can you introduce yourself to the audience?
Yes, good afternoon, Chris. My name's Randy Matthews. I'm a senior payroll tax manager with PayWorks. Before that, I've been involved at the CRI level, working with various clients on payroll, and been involved in and out of payroll for 30 plus years.
Thanks, Randy. So today's topic, the Employee Retention Credit. We've been hearing about this credit for probably a little over a year now, started rolling out in 2020. Anne-Marie, can you tell us a little bit more about this credit?
Sure. So the Employee Retention Credit is sometimes referred to as ERC or retention credit, and the idea is it's a payroll-related tax credit that allows employers that have W-2 employees to get a benefit for continuing to employ people through COVID. So there have been retention credits in the past, some related to hurricane and other items, but because of COVID, they created a credit for payroll taxes. So the idea is that you get money back on your payroll tax return for continuing to pay your people through COVID. These credits, while they are eligible for both 2020 and 2021, you are looking at to where you could get up to $33,000 in refundable tax credits per employee, potentially, if you were qualifying for the max credit under these circumstances. So I had a client recently get $120,000. I got a thank you text message that said thank you, right? And so the federal government is paying businesses to continue to employ people, and they're paying them through their payroll tax credit.
Great. Thanks, Anne-Marie. Are all companies eligible for this ERC credit? Are there certain ones that do and don't qualify?
So there's some tests to determine, and those tests depend upon how many people you employ, and there's a test on if you have a either significant decline in gross receipts. So top line revenue, if there's a decline in revenue because of COVID, or if you were fully or partially suspending operations due to a government order. So it's one of the two. You hear a lot of people talking about gross receipts or the test for gross receipts. It's important that people understand that it's an either or. You might qualify because of COVID, you were suspended. You had to suspend operations and you continued to pay people through that. Or you just were impacted by COVID and you had a decline in gross receipts. These tests, when we would call about the test, if we're looking to the gross receipts test, for 2020, you need under 100 employees with a 50% decline in gross receipts or shutdown. And when I say a 50% decline in gross receipts, I'm looking at did 2020 gross receipts, top line revenue, decline as compared to 2019? Another test is for 2021. So you can get this credit either for 2020 payroll tax credits or 2021 payroll tax credits. The 2021 test is under 500 employees. So they expanded the number of employees. And then instead of a 50% drop in gross receipts, it's only a 20% drop in gross receipts. So comparing 2021 to 2019, if there's a 20% drop in gross receipts or there's a shutdown, then you qualify potentially for this earned employee retention credit.
Great. Thanks, Anne-Marie. One point of clarification, you mentioned in 2021, when we're measuring gross receipts decline, we're comparing 2021 gross receipts to 2019 gross receipts. So we're going back 2 years. Can you confirm that?
Yeah. So, I mean, the idea is, what did it look like pre-COVID? So pre-COVID 2019, the assumption is that your revenue was higher and that you were impacted by COVID. So you need to determine tax basis top line revenue quarterly, and you compare that quarterly revenue from 2019 to either 2020 or 2021. So just for example, if I want to test to see if I meet it for this coming up quarter in June 2021, I would look to Q1 2021 as compared to Q1 2019. And if there's a drop of 20%, then I meet it for that quarter. Now, Chris, nothing's ever easy, and they make other rules for startup businesses. And there's another test to see if you meet it for the prior quarter, then that quarter qualifies you for the current quarter. So in that case, you could also test March to see if you meet it for June. But the idea is, were you impacted in these later years, 2020 and 2021, as compared to that pre-COVID period of 2019 quarterly?
Yeah, great. That absolutely makes sense. So when you're talking to clients, what are maybe 2 or 3 kind of key indicators or questions that you ask those clients or those companies to determine if they could qualify for the employee retention credit?
Well, the first easy indicator is, were you shut down? Because a lot of people talk about these gross receipts tests, but if you were shut down to a government mandate, close all gyms, right? That's a clue. The next clue would be just drops in revenue where they were impacted. The idea is they refer to it as a significant decline. Well, I would say 50% is very significant, 20% is significant. So if just revenues are down as compared to where you were pre-COVID, those are great indicators. I think the biggest point that I want to make is this is tax, right? This is a tax rule. And so it's important that people understand we're looking for quarterly profits, and it's quarterly tax profits. This is not, book basis financials. So there's a key point there to ensure people are thinking tax and breaking down that quarterly revenue for tax. Great.
Thanks. Now, when I was talking to a lot of my clients during 2020, a lot of them were making the decision, do we go after the Paycheck Protection Program loan or the PPP loans or the employee retention credits? And many times companies opted for the PPP loans in lieu of the employee retention credit. Yeah, I know in 2021, it's the retention credit has gained a lot of popularity. Can you explain to the audience why kind of ERC has gained that resurgence in 2021?
Sure. We kind of joke around here at CRI. I was kind of tasked with summarizing retention credit early on, and nobody liked me. They all picked, PPP, Mr. Homecoming Queen with his PPP, but nobody picked me. So we did a lot of research and a lot of summary, but the big change is in March of 2020, when all this came out, it was either PPP or ERC, either or. In December, when the Consolidated Appropriations Act came out, so in December of 2020, kind of all the way through 2020, they came out and said, you know what, we're going to change the rules retroactively. Now you can take PPP and ERC. You can do them both together. As long as you don't use the same set of wages, you can do them both together. And we're going to let it go on into 2021, and we're going to expand those tests. So the test I talked about before, where I said 100 employees, it became 500 employees. And 50% drop in gross receipts became a 20% drop in gross receipts. Another key element is 2020 was only $5,000 per employee per year. 2021 is $7,000 per person per quarter. So it just exploded in December, and they changed the rules and expanded the credit and allowed it to go along with PPP. So now there's this huge opportunity for businesses to get potentially as much as they did with PPP with ERC.
Wow, sounds like a great windfall for companies to get both PPP and ERC. Are there any kind of high-level strategies that companies need to think about in trying to maximize the two?
Yeah, so that is where it gets really exciting. Randy and I have had many discussions on the topic. The idea is PPP, most people went and got it, and the importance of getting that is huge, and that's a tax-free benefit that should take precedence, right? You want PPP forgiveness, but we all know that ERC is complicated, but PPP is just as complicated, and there are rules with PPP that say, hey, if you use 60% of your payroll and 40% quote other costs for PPP forgiveness, there's opportunity to go use additional wages for ERC. So that's very complicated to say. Let me just kind of break that down a little more. Say you received a $100,000 PPP loan, but you paid out $125,000 in wages during that same period. There's opportunity to go get ERC for any unused payroll. We know that if there's a $100,000 PPP loan and $125,000 worth of wages, we know easily that there's $25,000 remaining for retention credit to give you money per employee. Where we like to come in is say, well, there might be even more opportunity with the other 100,000 by, filling out that PPP forgiveness application just so that you use as little payroll costs as possible while maximizing the 40% non-payroll costs to kind of maximize wages such that there's more left over for the retention credit while also getting full forgiveness for PPP.
Great. Sounds like the best of both worlds.
It is. And we're seeing it happen.
Yeah. So moving over to Randy, Anne Marie's kind of covered the employee retention credit, but she also mentioned it is a payroll tax credit. So Randy, with PayWorks, what do the audience members here need to know about claiming the ERC?
Well, as Anne Marie alluded to, there's a maze of things that you have to go to find out if you're actually eligible for the ERC. But once you've determined that, it's a fairly simple calculation. Just really what we need to know is your wages for your eligible employees, as well as any healthcare costs the company has paid on their behalf. So it's really just a matter of coming up with those two numbers and making a calculation, including that information on your quarterly 941 employer tax return.
Great, Randy. Yeah, you mentioned the 941, and kind of building on that, as companies are filing their 941, they can claim the current employee retention credit. But what about kind of prior credits in the 941X? Yeah, can companies just wait and just take this credit maybe later on at the end of the year and just file a bunch of amended 941Xs to claim the credit, or is there any difference between the two?
Well, from an overall dollar standpoint, there's really not a difference. It becomes a timing issue at that point. The preference would be to file it on your current 941 because if you do that, we can file that. In the case of PayWorks, we're filing that electronically, which means that probably within 4 to 5 weeks after you submit your 941, you should receive the refund for your credit. Whereas with the 941X, the most recent information we have is that the IRS currently has a backlog of about 10 to 12 weeks of even processing paper returns, which the 941 amended return, the 941X, is a paper return. It cannot be filed electronically. So I think the preference should be to make every effort you can to file it electronically on your quarterly 941. The overall, there's really not a difference. You'll get the same money back either way. It just becomes a timing issue.
Yeah, and I know we've, in many tax types, we're experiencing the delay that the IRS is currently having, but there's definitely a time value of money component. So it sounds much more beneficial to get it on that originally filed 941 versus the amended 941X. Anne Marie mentioned there's also a possibility now when they change the rules that we can claim the ERC and the PPP at the same time. We can go back into 2020, get an ERC for 2020, file a 941X. Does that mean that companies will also have to issue all their employees amended W-2s for those wages?
No, the ERC is really a program that works between the employer and the government. It really doesn't affect the employee whatsoever, other than the fact that they should be more secure in their job because the company has wages to pay them and an incentive to keep them employed. But as far as the employee is concerned, his tax situation is really not impacted by the ERC program. It is strictly between the federal government and the employer.
Great. I know that'll mean a lot to companies because amending W-2s is definitely not a enticing experience. So it's good to hear that that aspect won't be impacted. We've been talking about the employee retention credit as a tax credit. But I just wanted to clarify to the audience that if we claim a credit on our payroll tax filing, does that mean that there are potential refunds available against those payroll tax filings, or are they just offsetting other taxes?
No, it's money in the bank. Anne Marie referred to earlier the client that she had that received a $120,000 refund check, and I actually worked with Anne Marie on that client, and I can tell you that they received a check, money in the bank, for $120,000. This isn't a promise to get money later. This is cash in the bank today.
I know that cash in the bank is important to companies. Tax credits are great, but money in the bank is even better. Yeah, some companies have, I guess, heard that there's a Form 7200, which is basically the form for receiving an advance for future payroll taxes. Can you tell us a little bit about that and what kind of issues you kind of foresee with potentially trying to get an advance on the payroll taxes?
There's a couple of issues that I see. One being that you're making an estimate, and anytime you make an estimate of what your payroll is going to be, it's subject to market changes. Who knows what can happen, and so you're making an estimate of what you think your payroll is going to be. So there's always the chance that it could be wrong. The other issue could possibly be that as I mentioned before, you're going to file that 7200. It's a paper return. You're going to file it. You're going to send it to the IRS, and you're going to wait for the money to come in. It's entirely possible that if you wait and just file it with your 941 through the normal process, that you could actually get your money sooner than trying to get the advance with the 7200. In my opinion, in most cases, it's something that I would think long and hard about before I actually pursued the refund advance that way.
Yeah, that makes sense. It sounds like there's some additional complexity and may not actually come to fruition as well as it's being touted. Yeah, I guess moving forward into how CRI and how PayWorks kind of fits into the whole employee retention credit ecosystem. Anne Marie, can you kind of cover where does CRI fit into that equation? How can CRI help alleviate some of that burden that companies may be incurring now trying to assess for the ERC?
Yeah, so Chris, we want everyone who qualifies to get a credit, but the point is you need to make sure before you just go asking for potentially hundreds of thousands of dollars that you first know these rules, know the play between PPP and ERC, know that you meet either the shutdown dates or the decline in gross receipts. So CRI prepares financials for people or assists in bookkeeping. And the recent example that's just the perfect one would be where we are preparing some quarterly financials for a client, and I was able to quickly pop in at the end of March and say, you know what, you're down. I'm sorry you're down, but you know what, there's opportunity here. Let me make sure Randy with PayWorks doesn't file your quarterly report the first week of April, right? And so what's nice is I was able to shoot Randy an email, get on a call and say, hold that payroll return. I think I owe you some figures. And so Randy and I worked together to, I was able to test those gross receipts, make sure he qualified, get approval from the client, and run a calculation with him because we do their financials, we do their payroll, and we did their PPP, right? So we knew all the picture. CRI is willing to work with anyone. If you handled your PPP alone and need help, if you handle your payroll alone or have a third-party payroll, we can bring all that together between financials, PPP, and ERC to make sure they're all talking together to benefit, potentially to get some credits.
Great, thanks. And Randy, kind of same question as Anne Marie, for companies kind of struggling with the employee retention credit, how does PayWorks fit into that model?
Well, we're designed, basically to, as a payroll service provider to be a resource to them. We're not in the business of giving tax advice, but we can point them in a direction. A lot of our clients obviously are CRI clients, and so we can put them in touch with the accounting professionals. But at the same time, we can answer some of the basic questions, and a lot of times, have an answer to what if they determine on the eligibility side, whether they're eligible or not. We could actually already know, okay, if you are eligible, here's what the windfall would be. So, they can make an informed decision as to whether it's something they want to pursue or not. What I find in most cases is, and with ERC, it's something that if you're eligible, you absolutely want to pursue it.
Okay. And I guess when the rubber hits the road, it sounds like, Randy, you with PayWorks is kind of going through those steps to get the filing for the credit, I should say. Can you cover kind of what PayWorks files, what they undergo to kind of get that money in companies' pockets?
Well, we're going to take payroll data and we're going to accumulate that information. And really on the 941, the IRS redesigned the form to where there are specific sections that we input that information, and the end result is a 70% recovery of payroll costs for eligible employees, as well as associated health insurance costs for those same employees. So, like I said, what the big part of it is really determining the eligibility. Once you determine you're eligible, the actual calculation it's just a matter of accumulating the data and putting it the right place on the form.
Got it. Thanks. And I guess combining the two of you, Anne Marie and Randy, it sounds like ERC is something that companies may need both CRI and PayWorks together on from both the consulting and the compliance side. Yeah, if a company's kind of struggling with how they can benefit from the employee retention credit, should they reach out to PayWorks? Or should they reach out to their contact at CRI? What do you guys both see as a best recommendation of what companies need to be thinking about and reaching out to?
I think on this one, there's no wrong answer. Meaning, if you start with Randy and there's some financial statement need, he's going to reach out to CRI to say, "Ooh, we got to get past that gross receipts test or that shutdown test before we start putting numbers and squares on a payroll tax return." And same thing, if you start with me and we realize you meet all these tests, but all your payroll data is with Randy, I think that's the seamless piece between CRI and PayWorks is we can talk pretty quickly and efficiently to, check on the gross receipts test and move on. And here are your numbers for payroll to extrapolate what you need to be able to run these calculations. So either or, it'll work.
And Amory, the only thing I would add to that is, I would encourage people, just don't assume that you're not eligible. I mean, I can't tell you how many people I've talked to that they just assumed, well, I did PPP or I did this or I did that, I'm not eligible. And when we actually dug in and started looking at their numbers, they were eligible, and it created, tens of thousands of dollars of windfall to these struggling businesses. So I would encourage people not to assume that you're not eligible. And whether you reach out to me or you reach out to Anne Marie, reach out to someone, because there's money there to be had.
Yeah, to parlay on that, I have a client that said, okay, I realize I can take both. My PPP was the first quarter. We'll just pick up ERC with the second quarter. Well, there's still opportunity for ERC, in that first quarter. So don't just assume that, it's more complicated than you think. But we're here to help and try to show you those strategies to grab more retention credit where available.
Great. Yeah, I guess the bottom line is we all don't want to leave money on the table, so make sure we're claiming everything that we're entitled to. You both have been referring to a client success story on how CRI and PayWorks kind of work together seamlessly in getting that ERC. Yeah, can you tell us the full story of how that worked from your both of your perspectives?
Yes, I have a client that I knew was hurting from COVID, and for different delays. I mean, they're going to be fine, but for various factors, their gross receipts are down. And I just immediately reached out to Grandy and said, before you file that, wait for me to make sure I've tested this gross receipts. He was so helpful, and we kind of together reviewed that calculation in a matter of 2 emails. I mean, a quick conversation, you approve, I approve. And it because of the seamless nature of having all the data by employee in payroll and having those financials quarterly and having access to PPP, we were able to get this client $120,000 and likely get a whole nother level of $120,000 again for the second quarter. Chris, sometimes I feel like the funeral director around here telling people what they owe in tax. And on this example, I actually got a text that said, thanks. Within 4 weeks, we had a check, cash in the bank, fully refundable payroll tax credit, because Randy and I worked together to see an opportunity for this client to help them through this COVID kind of odd time.
Yeah, and Randy, from your perspective, can you kind of weigh in?
Yeah, those are the fun phone calls to get. Anne Marie contacted me and said, hey, I have this client who happens to be my client as well, and I'm able to pull some data out of the software and quickly put it in a format that calculated the potential credit and sent that off to Anne Marie. She reviewed it, agreed that the figures we had were correct and usable. And the next thing we know, it's applied on the 941, and the postman shows up with $120,000. It's a beautiful thing when it works.
Absolutely. Well, I appreciate Anne Marie and Randy. Appreciate your guys' time. Appreciate the audience today. Appreciate your time listening to this podcast. Hopefully you've gleaned a little bit about the employee retention credit. Hopefully piqued some interest with you on maybe next steps, things you need to be thinking about and pursuing. And with that, I will thank you and hope you tune in for our next podcast of It Figures.
If you want more CRI insights or are interested in learning about our firm, please visit our website at cricpa.com. Thanks for listening to this episode of It Figures, the CRI podcast. You can subscribe to It Figures on iTunes, Spotify, or wherever you prefer to listen to your podcasts. If you liked what you heard today, please leave us a review.